Nintendo has to be one of my favourite companies, and that's not just because of the quality of its products, but also from my perspective as a long-term investor. I'm such a fan of the company, in fact, that from a long-term investment perspective, I'd probably like to buy and hold the company's stock until I'm as old as Mr. Buffett or Mr. Munger. I guess we'll see how that goes. But why, as an investor, do I like Nintendo so much? Perhaps most importantly, it's because of the company's wealth in intellectual property, represented by original franchises, which it's able to deploy over and over again in its entertainment products. Some of Nintendo's most popular franchises include Mario Kart, Super Mario Bros., Pokemon, and The Legend of Zelda, and the sales figures for games sold under these franchises are quite extraordinary, as you can see from the sales data for Nintendo's latest console, the Switch. As an example, Mario Kart 8 Deluxe has sold almost 50 million units globally over the lifetime of the Switch so far, with other titles achieving similarly impressive results. If you look back to the sales figures for the legendary Wii console, which was released almost 16 years ago, you can see that curiously similar sounding titles to the ones available on the Switch today sold equally successfully back then. And I've no reason to doubt that in another 16 years' time, Nintendo will be continuing with this winning recipe of combining new technology with classic franchises as it releases new consoles. To borrow a phrase from Mark Twain, history doesn't repeat itself, but it often rhymes. This is the phrase which comes immediately to my mind when I see 37 million units in sales on the Wii for Mario Kart Wii, and then almost 47 million sales on the Switch for Mario Kart 8 Deluxe, or approximately 83 million sales for Wii Sports, and 4.84 million sales for the new Nintendo Switch Sports game released during the first quarter of the current financial year, the latest we have data on. New Super Mario Bros. Wii sold 30 million units, while so far Super Mario Odyssey is at almost 24 million. Hopefully, you can now more clearly see what I mean when I refer to the recycling of franchises. At this point, it should perhaps be emphasised that Nintendo really does make some of the best quality games from the perspectives of game critics and players. The Legend of Zelda Ocarina of Time from 1998 is now widely agreed to be the best video game ever developed. And other titles, such as Breath of the Wild 2017 and Super Mario Galaxy 2007, have also been described in similar terms. Employees, like fans of the company, have an almost religious devotion to creating high-quality software, which some might argue is reflected in the 14.2-year average length of service for the average Nintendo employee. And I haven't yet highlighted one of Nintendo's other great competitive advantages. Video game development is an area with extremely high technical barriers to entry, especially at the elite level Nintendo is playing at. And the company has an extremely wide moat in its unique niche within the gaming market, perhaps because it spends so much on research and development. In the 2022 fiscal year, the company spent $843 million on research and development in areas including but not limited to virtual reality, augmented reality, mixed reality, deep learning, and big data analysis. Given the scale of investment in research and development by the company, I'm inclined to believe its claim that this will allow Nintendo to put smiles on the faces of everyone Nintendo touches around the world by offering new and compelling products that everyone can enjoy in future. I've made a big point of Nintendo's wealth in intellectual property so far in this video, but the fact of the matter and core point of the video is that Nintendo's historical and ongoing business model of creating and then recycling these different gaming franchises has proven to be very lucrative. And there's no reason to think that this pattern won't continue over the coming decades. The argument is only more convincing when one considers that a generation of children who played the highly successful Wii and DS consoles are now adults, and their emotional investment in Nintendo and its franchises will likely motivate them to want to buy Nintendo games for their children in the coming decades. And perhaps the most important thing to keep in mind is that since the potential future value of the intangible intellectual property can't be evaluated by an accountant, it's not on the company's balance sheet, even though it's probably Nintendo's biggest asset. For a more concrete evaluation of the company, we also need to look at some numbers which will illustrate its current financial position. In the 2022 financial year, business activities generated approximately $14 billion in sales and ultimately $3.95 billion in net profit attributable to the owners of Nintendo stock, giving a shockingly low PE relative to its peers of 12.3. For context, game developers like Activision Blizzard, Take-Two Interactive, and Electronic Arts currently have PE ratios of 33.6, 81 times, and 41.6 times respectively. The graph shown here illustrates how Nintendo's PE ratio has been steadily falling over the last 5 years or so. 78.8% of Nintendo's sales over the past financial year came from outside of Japan, with the Americas representing 43.5%, Europe 25%, and everywhere else representing just over 10%. From my point of view, this US dominance in the company's customer base is very positive for US investors, as they probably needn't be too concerned with what's going on in Japan's economy or currency. If customer purchases are largely taking place in dollars, then, to a greater or lesser degree, this will follow through into profits too. A glance at the balance sheet reveals a company in very good shape to be able to handle the uncertain whims of the gaming market, with minimal debt and plenty of cash. Approximately $12 billion compared with a $50 billion market cap. Not every Nintendo product is a success. The Wii U was an infamous flop, and the company's conservative financial approach was in my view critical to its turnaround with the launch of the Switch after that relative failure. As a final point, income-focused investors will also be very pleased to hear that the company pays a healthy dividend, and the yield has increased nicely over the last few years, as you can see in the graph below. Another critical aspect of the company, which must obviously be considered when making an investment decision, is the quality of the management team. In Nintendo's case, I have a lot of confidence in the president and CEO, Shuntaro Furukawa, who joined the company in 1994, aged 22, and has therefore developed a long-term sense for what works and what doesn't for the company. The fact that he was director of the global marketing department before becoming CEO is also reassuring. It shows that the company is aware it needs directors very familiar with the international side of the business, given that such a large proportion of its sales are outside Japan. Encouragingly, the more creative figures in the company also have a voice, with Shigeru Miyamoto, the original creator of the Mario and Legend of Zelda franchises, who joined the company back in 1997, also a representative director and fellow of the board. That such voices are present at the highest level is essential for the company to continue exploiting its winning recipe of recycling classic intellectual property into new formats. An important consideration to keep in mind is that the wildly successful Nintendo Switch, with 111 million hardware sales at the time of writing, is currently reaching the end of its lifetime, having been released in March 2017, and there's undoubtedly a lot of uncertainty about what we might see from the next console. The Switch has been extraordinarily successful, but there's no guarantee the next console will perform similarly, and the company has had flops in the past. The Wii U is probably the biggest in recent memory. While I think a similar situation for the Switch 2 is highly unlikely given the degree of experience of the management team, it's reassuring that the company has a lot of cash on the balance sheet to recover from a misstep with its next console, however unlikely that may be. Most of the other potential threats to the company's business performance seem to me to be short-term and not too serious. The main ones worth mentioning are related to the supply chain, dependence on outside companies to produce key components and assemble finished products, and also rising shipping costs. I'm confident these are not issues which long-term investors need to be concerned about, especially with the company's president reassuring that the company is on track to improve its chips procurement in the second half of the summer. So, in conclusion, Nintendo's intellectual property is its biggest asset, yet you won't see this on the company's balance sheet. Perhaps this is why the market is offering us shares in this company at what seems to be a significant departure from fair value. The company's other competitive strengths seem to further solidify the case that Nintendo is currently cheaper than it should be, in my view offering an attractive potential long-term investment with a great risk-reward profile. So that's all from me for today. Thank you very much for watching this video, and I'd love it if you could suggest any improvements or other companies you'd like me to cover. I would also really appreciate you clicking the subscribe button so I can bring you further investment research in future. Thanks for visiting, and see you in the next video.